Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 24th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. A little bit of economic data today. We got GDP estimates out of Great Britain came in line with expectations at 0.3%, and then preliminary business investment out of Great Britain waned a little bit, came in at unchanged, was expected to be an increase of 0.2%. That number is consistently kind of ratcheted down, so not a great look at business investment from that standpoint. Anyway, unemployment claims came in line with expectations at 234,000 in the U.S. here. And then we also got existing home sales, which came in at 544 million or 5.44 million units, expected to be 5.55 million units. Mortgage delinquencies came in at 4.24%. Now, I don't usually talk about this number. It is pretty important, but one of the caveats to that number is we're seeing the lowest level of mortgage delinquencies since 2005. So quite a while since we've seen that low of a number, so that's good for the overall economy. Also, or at least it shows that people are able to pay their bills in a sense. And then we got natural gas storages coming in at 43 billion cubic feet in line with expectations. And then we also got, or we also have, I should say, since it's an all-day event, the Jackson Hole Symposium going on. Onto the overall market, and we're actually, one thing with the Jackson Hole Symposium, we do have a little bit of a pullback in the equities. It's not much, but we're seeing a spike in the VIX, which I think is more correlated to the binary event of Jackson Hole creating a little bit more volatility in the overall markets. But that's not necessarily going to affect crude oil inventory or crude oil here, but we have crude oil down over $1 and testing that 50 Fibonacci level. You know, we've come up short the last couple of days testing that, but it has gone down there and touched on it, kind of kissed it, if you will. But just slightly off of that right now. We're trading at 47.27, and that fib level is at 47.21-ish. So keep that on the docket. Whether or not we settle below that would be a win for the bears. But onto the overall broader markets, we have gold futures off just a little bit by about $1.90. Can't really get through this whole resistance area. We got these two value area highs lining up, one being the value area high for the volume, one being the value area for the time spent. So at the end of the day, that's going to be a big resistance area. It could get stuck in right now. So gold futures just off slightly, despite the fact that we're seeing equities off as well. Bonds, negative territory. You know, nobody's happy today. Crude oil's negative, bonds negative, gold's negative, equities negative. Usually we say everybody's happy when they're all positive, but today they are at this point all in negative territory. So, and I've talked about this. I think the more we see in this Jackson Hole Symposium, we're going to see bonds want to curl to the downside, because I think they're going to basically say that the overall market is where they want it to be. Dow Jones just off slightly, off of the lows. They were just down about 20 a minute ago, but down 12 now. As I talked about, this is really a quiet day. Everybody's just kind of wait and see if any action or any news comes out of this Jackson Hole Symposium before really making a move. We've got NASDAQ leading the way to the downside. The overall tech sector suffering more so than the rest of the markets, but the NASDAQ down almost 30 at this point. E-mini S&P is just slightly in negative territory by about 2 points, and probably very comfortable at these levels. Does seem like we're starting to see lower lows, lower highs here, which isn't very good for the bull market assumption going forward if we continue to see that, obviously. This is the E-mini S&Ps. As you can see in the last 30 minutes or so, we are starting to get a bounce off of the lows, down 2 points on the day, but we're starting to see again the lower low, lower highs, and the point of controls consistently, moving to the downside as well, which is also very bearish from a market technical analysis standpoint. All right, on to a couple of other things. We got the VIX. This is what I was talking about. Actually, is coming off right before I got ready to start this. It was kind of spiking a little bit. Could be some of the rhetoric coming out of Jackson Hole, but that's what I was talking about. It was really kind of overdoing it to the upside in relation to how the equities really aren't seeing a big sell-off. Usually that's when we start seeing the VIX spike, and it was starting to spike, and it could have been a particular Fed governor maybe speaking at the symposium. On to a few other things. This is that Lowe's trade I talked about yesterday. Big turnaround in Lowe's after I put on that trade. Remember, I'm short the 72 and a half 72 and a half calls in there, and I also have on a short call spread in my IRA. I'm going to have a real short leash on this. Thought it was going to kind of hang out here, right here at the point of control. Went up and covered that gap, which is a good thing from a technical standpoint. You cover that gap, it can continue to the downside. Then it doesn't have to feel like that's a target it needs to cover. Kind of like, in the past, we have this gap. Market moves and then always wants to fill in that gap. Well, we filled in this gap yesterday, so if there's something to hang my hat on, I have that, but I am going to have a very short leash on this because the probabilities have been tested. I know the probabilities of me being tested and the probabilities of me being correct in this assumption. So I'm going to stick with it for now, but I'm just letting you guys know that the ripcord on this trade could be pulled at any moment. So it was looking quite nice today when we traded off earlier in the morning, came down to the value area, and I thought, okay, we're out of the woods, and now we've gotten a little bit of push to the upside, so it's not looking so great at this point, but I'm going to hold on to it, but like I said, very tight leash, and ready to pull the ripcord at any moment. Now, XLK was looking really good this morning before the NASDAQ started pacing everybody to the downside. I'm looking to get out of this trade. I have on these September 55 puts that I'm short. Sold them originally for 31 cents. Tried to buy them back for 17 this morning. We got pretty close. It was mid-market. Nobody ever hit me, unfortunately. And the market has since come off in here, which is causing those premiums to increase, and it's trading around 25 cents right now. So, but I am looking to get out of that if I can get out for 50% of my max profit. XRT is another one that, with this big spike today, looking to get out of this one as well for 50% of my max profit. And I have on these September 38 puts in there. Originally sold those for just over 60 cents. So I'm trying to get out of those for about 30. Last I checked, it was trading around 31. So a couple of things in the markets working, hasn't really come to fruition yet. Also, I'm trying to save a little bit of margin for an earnings trade today, which is going to be for ULTA, ticker symbol ULTA, and I can punch that in here. I think they're going to probably beat on earnings. They have a tendency to always do very well on their earnings and kind of outdo what the market predictions are. So it's had a big sell-off as of lately after their last earnings, and I think that it's going to be a good point to add a bullish trade to ULTA. they're one of the few retailers that are actually doing pretty well. And it has to do with, I think, that women like to go into these types of stores in order to try on makeup rather than buy a color that they can't really see on their skin. And even my wife says, you know, perfume smells differently on your skin, and different makeups act differently on different people's skin. So you can't really throw all of these things in one basket. These are some things that you really need to try before you buy, if you will. It's not like a pair of jeans where you can buy them online. You get your 5 pair of jeans with different sizes, try them on, send back the other ones. You know, you can't really go in and just use some makeup and send it back. That doesn't work that way, right? But you can go in there and use their samples and then go ahead and buy. So I think that they have a little bit of a niche in that sense where it is a destination type thing where people need to go to. So I think that they're going to do very well. So I'm going to play that to the bullish side, most likely. All right. So tomorrow's webinar is going to be on the put diagonal, and it's great for setting up for earnings when we get an assumption in an overall market. Say, for instance, we were bearish on Walmart going forward, or even Target. We can set this strategy up in order to take advantage of volatility going down and theta decay in the near term, and then exploit volatility expansion when we know it's going into a binary event. As you can see, heading into any binary event, for the most part, we are going to see volatility increase. So we're going to take advantage of that, and I'm going to show you how to set this strategy up to increase your probabilities of success. Because at the end of the day, anybody can teach you how to set up a put diagonal, but not anybody, or not most people, and as a matter of fact, I don't know if anybody out there is going to teach you how to pick your strike location in order to increase your probabilities of success. All right, so I'm going to do that tomorrow, and also on September 5th, I'm going to be participating in Festival of Traders. So you can go to protraderstrategies.com, sign up for both of those. It's going to be a really good one. The Festival of Traders are a lot of fun too. All right, so that's all I got for you today. If you can't take that, take it easy.